Good afternoon and welcome to Stock Market Today, sponsored by Interactive Brokers. It's Monday, December 16th, and we're live from the Investors Business Daily Studios in Los Angeles. On today's show, we're going to be talking about three stocks: Tesla motoring ahead along with Autodesk, and Amarin giving investors a little bit of a heart palpitations, right, Ed?
That's right.
But first, let's go ahead and take a look at the major indexes. It's Justin Nielsen along with Ed Carson, and a very strong day in the markets today. Looks like the composite, NASDAQ composite up 0.9%. Dow Jones Industrials lagging a little bit. I think that was due to Boeing, right?
Yeah.
Yeah, and that was 0.4%, and the S&P 500 up a solid 0.7%. A lot of stocks looking very strong today. Any particular catalyst?
No, it just seems like more happy thoughts after the China trade deal. I mean, because we didn't really move a whole lot on Friday when we actually had the announcement, though we'd been rallying on Thursday. So strong action there, and just a lot of stocks that had were just below buy points, that had tested buy points, and the ones were like Tesla and Autodesk. Now they came through from one way or another. And yes, you're right, Boeing. There's reports that it may slash or halt 737 MAX production altogether for a time.
Right.
And so that one hit Boeing, and Boeing is the biggest weight in the price-weighted Dow. So that's the NASDAQ, S&P, and the Dow. They all hit record highs. Very strong action. You could actually see that a lot of the uncertainties around the world for the market. I mean, Brexit, the U.S. The NAFTA revision deal. Just a lot of things going on positive.
Yeah. Okay. So let's start talking a little bit about some stocks, and we'll go ahead and start with Tesla. Strong move there. It looked like it finished near its highs. Any particular catalyst on this one?
There's some chatter out there that maybe Congress will extend the electric vehicle credits, so more vehicles per automaker can get the full $7,500 credit, because Tesla's already running down on that. GM too, but Tesla especially, and it's going to go away completely on January 1st, where its rivals will be able to have a $7,500 discount as they really start to produce. Now, I don't know if that'll happen, and the stock has obviously been running up. There's a lot of technical things. Base is really deep. I believe it was like 53% deep, so that's an issue, because, research shows that 40% or more deep, not a great sign. And this wasn't even during a correction. I mean, it's like at least a lot of the big ones from late last year, they had some friends going down there. But nice action off of earnings, nice things here. It's getting into that 380, 390 resistance area that it's hit several times over the last several years. So this could be something that really kicks it off from here, or it hits resistance, or it could do something in between.
Yeah. And I guess one of the good things is that at least, for as deep as that base was, it did kind of take that break, and that was a much tighter area, not quite as wild. And then, of course, we'll have to see as this thing approaches 420 whether funding's secured or
funding secured. Yeah.
Okay, let's take a look at Autodesk. Now, Autodesk was there were a lot of stocks that looked very similar to this, where it kind of got support at its previous buy area, the top of its previous base. It actually, in Autodesk's case, it was almost like a 3 weeks tight here, and really powered ahead, closing at its highs, but volume was a little below average.
But this one, it was a little below average. One of the nice things about this is that it really did clear, and this 3 weeks tight was just above the old high, so there's not too much confusion about the buy area. It's
very clear.
Very clear, so that's positive. And Autodesk, it had a lot of failed breakouts and a lot of a lot of it on earnings. And this time the earnings, it shot up on earnings, which was nice. It needed to take a breather. You can see all those little up days before the earnings breakout a few weeks ago. So it needed to take a rest. That's fine. Maybe this is a changing character. It has great earnings growth now because it's shifted over to subscription model.
Right.
And this tight action is especially nice for Autodesk, because it has sort of these loose bases, and then they would fail, which is the worst part about it. But these loose bases that failed. Here we have loose base, but then it tightened up, and now it's trying to break out. And so maybe this is a character change for a stock that could really go.
Yeah, and as you mentioned, that earnings, triple-digit gains, earnings growth for the last 3 quarters. And this is not off of small numbers. This is 45 cents, 65 cents, and 78 cents per share. So the revenue growth is a little bit more tame, but still very solid at like 30% range. So
that's pretty good.
Not bad at all. And now for the wildest one of the day, Amarin, up a lot, then did not close nearly where it started.
Yeah, and there were a lot of people. We were at the Level 4 Can Slim seminar over the weekend. A lot of people were talking about this because on Friday night it shot up 11% because the FDA had formally approved this high triglyceride drug for treatment of cardiovascular events, basically preventing heart attacks. And that was a second use and a huge market for this drug. The stock had already gapped higher like several weeks ago when the FDA advisory panel basically said, yeah, this is a good idea. So everybody assumed it would happen. So maybe there's a little bit of buy the rumor, sell the news because everybody knew it. But boy, this is why you got to be careful of pre-market action. In the first 5 minutes, this one popped out and then almost immediately came right back down.
So now at this point, I mean, if you were buying, it's almost like what, at your 7%, 8%, stop loss. So that's kind of a tough go. And this is also one of those reasons why a lot of times when we start our purchasing, we start with a half position and wait until the market tells us that we're on the right track and that the stock is going up, and that's when we start following it up with the positions after that.
Yeah, because we talk about trying to buy it near the buy point, but that's often like starting off with a position and like not a full position, and like this mini pyramid, So you can do that to avoid getting hit as much. This is just an issue with biotechs in general. I mean, this is one reason why we often talk about maybe ETFs are the way to go. Because the biotech group is #1 right now. It is vaulted above chips and everything right now in our tables. But this kind of thing can happen. It could be a lot worse too.
Yeah, exactly. And you always have that single stock risk, even heightened a little bit more with FDA approvals, clinical trials, not to mention earnings, as you have with all stocks. So a few ETFs that we look at, IBB is kind of the single, the BIB is the double, and LabU, if you really want to get juice in your performance, is the triple leveraged. But that'll go ahead and do it for us today. A couple things that you should be aware of that you might want to check out. We have IBD Live. All of these stocks were stocks that we were talking about on IBD Live this morning, so that's one thing that you might want to tune into. We do have free trials available. Kind of see our take on the market as it's happening at the opening bell. And speaking of which, you can get to that at investors.com/IBD Live. But speaking of the opening bell, we do have a webinar coming up, and that is trading strategies for the opening bell. So you can get that information at investors.com/webinar. Are you going to be on that one?
Yeah. David Chung and I are going to be on that. Okay. So we're going to talk about our routines that we go through for finding and looking for stocks and looking for news, and it should be a lot of fun. So.
Yeah. So please join us for that, and you can get more information at that website. And we hope to see you there. And we also hope to see you here tomorrow. Thanks a lot for watching.